Good morning and welcome back to Margin. This morning we're going to talk about why you would pay cash for real estate. So let's jump right into it. So depending on who you talk to, people seem to have quite the polarizing view on whether it's smarter to purchase real estate with cash or with a mortgage. So much of this may be due to someone looking at the return on the money that they invest from a cash standpoint into their property and looking at how they may use that to be able to provide a better return in other areas. But more than likely, most people are just making this decision because we live in a culture that is very much so focused on the future being now, and that it is harder to delay gratification because of the fact that it's going to take time in order to buy a home paying cash than going out and actually paying for it using a mortgage. The other difficulty is the fact that it will take extended amounts of time to save up for that home, especially for the home that you would actually want to live in, and that time to save up for that property may not be worth that exchange for the risk associated to having a mortgage. So what are the arguments of each approach? I broke it down based on 3 benefits of buying with a mortgage and 3 for buying with cash as you save up and can actually buy that property. So benefit number 1 is a down payment. Getting a mortgage on a home using a conforming or non-conforming loan would allow you to purchase a home much sooner. So saving the minimum of 0% down for a VA loan, if you of course qualify for that, or 3.5% down for an FHA loan, or maybe continuing on to save until you have 20% down for a conventional loan, it's a lot more palatable for most folks than putting 100% down to pay your property in full. Now, depending upon your school of thought, some would argue it is better to put a larger amount down today and lower your risks associated to having a monthly mortgage amount that is too large or maybe is burdensome. So others may, on the other hand, try to mortgage out as much as possible due to locking in a percentage rate and paying with future dollars that are expected to be worth less. Now, no matter which approach you take, the down payment is definitely a perk. So benefit number 2 is tax benefits. Although you won't see a large benefit in comparison to what you actually pay out, having a tax benefit to offset the mortgage insurance that you pay out on a monthly basis when you pay out your mortgage is still a benefit to encourage people to be homeowners. So this benefit applies to whichever loan product you decide to go with. So your specific eligibility will depend upon the tax year in question and whether you are filing with a standard deduction or an itemized deduction, which can all be explained by a tax professional. So if you're trying to figure out, okay, what would be my tax benefit? You probably want to meet with your CPA and really look at the numbers and figure out what that benefit to you would be. So benefit number 3 is principal paydown. Another benefit is the ability to pay yourself along the way in the form of both equity and debt paydown in the form of principal. So a mortgage is typically made up of a principal portion or the amount actually going against paying down the balance of the home that you purchased. And then the other portion is interest, which is paying the bank or financial institution, the lender, that holds your mortgage or services your mortgage on a monthly basis. So in addition to this, you will typically have mortgage insurance or PMI, private mortgage insurance, unless you have put down 20%, or if you have satisfied your PMI requirement by the home gaining a certain number of value or amount of value over a certain period of time, that then you can remove private mortgage insurance. So you will also have taxes and insurance that you will pay into an escrow account if you have that set up. So this principal pay down allows you to pay yourself instead of renting and paying someone else's mortgage. So as for the benefits of buying with cash, now benefit number one is purchasing at today's values. So the benefit of buying with cash are evident in the ability to pay for the property up front, significantly reducing your risk over the life of actually owning that property. Now this locks in the current home price and protects you against future value increases that would work against you in your buying power. Now, of course, this risk still exists if you plan to move and purchase another property, but the growth in value with the market will allow you to take that additional equity that you've made in your home and put that towards the new property. Now, the value of buying with today's cash is that it's a hedge against price increases that someone renting would experience annually. So they would have a annual increase for their rent cost based on how long their term is for and whatnot. And so this actually hedges against your cost of living going up. Now, benefit number two is limiting your household expenses. Now, limiting your costs to just utilities, taxes, insurance, and possibly homeowners association fees and HOA will help you to still afford the home in the event of a economic downturn, a job loss, health issues, or something of the like. Now, removing the largest monthly payment that most people have will prevent undue risk to you and your family by building in monthly margin between what is actually coming in and what's going back out. Now, benefit number three to paying with cash is peace of mind. Oftentimes, I feel like people don't consider or even factor in the level of peace of mind that a home can provide or even remove. Now, I believe that this is probably the biggest benefit to paying cash for a home, and that is a lack of volatility in the world affecting you. Now, the potential for undue risk and the ability to then have rest is having your shelter component covered. Now, this peace of mind is so important, and in fact, so many people are searching for how to achieve this peace. Now, buying a home in cash will really force you to think through what it is you value most in a property and limit your search through the criteria to only buy what it is that you really need and nothing more. At least that will be initially. And as you're saving up for maybe stepping up from that home, you then can add in some of those wants accordingly. So which option is right for you? Can you delay gratification and actually save up to buy a home in cash, or do the benefits of expediting that process outweigh it? So my call to action today is to really think through what your life would look like without a mortgage or a rent payment, and whether that motivates you enough to forego signing on the dotted line for a mortgage in order to slow down the process and save towards paying 100% for your property. If this information is helpful to you, please do like, subscribe, and hit the notification bell so you're reminded to come back on a daily basis and improve in managing your personal finances. Thank you for your time. Enjoy your day, and we'll see you back here tomorrow.